Our 25th birthday on CNBC TV18, all ready to ring the bell. I have the entire team behind the scenes, all the guys who do all the hard work. So it's birthday celebrations for everyone here on CNBC TV18 and the most important person, our viewer, because of whom we are all here today. So thank you once again. I think we have, what, about 10 seconds left?
Yeah, let's go for the countdown.
20 seconds left
20
before
seconds.
the markets open. And it has been such a rocking ride, right? Not just CNBC celebrating 25 years, but the equity cult really strong, all-time highs for the market. So, a great day to celebrate.
You know, Sridhar Shivaram is also with us.
Sridhar is right here with us.
Thanks very much for joining us.
Thank you. Thank you.
Let's go.
Okay, 5,
4, 3, 2, 1.
And there you have it. You want to go for it? Go for it, Arshad.
You guys not my take.
Go, sir.
Come on, Nigel. Go for it. Right, and there you have it, the opening bell.
Longer.
I think we can put some music to the commentary, right? Get the gong.
Well, it's Mangalam, it's the party, Mangalam. Ring it. It is the party.
Well, I think we've got markets which have opened, 60 points lower, 60 points lower, and things are looking, I mean, the opening wall will come up on your screen just to give you an indication. But as Sonia was saying, right in the morning at 8 o'clock, this is the team, if you can see it behind us, around us, which basically puts the entire show on it every single day.
And, you know, we have Sridhar also here with us. Sridhar, thank you for joining us.
Oh,
great time to be in the market.
Of course.
All-time highs. How are you feeling about it?
No, actually, I want to take some perspective. That 25 years, I started in '93. There was no CNBC then, and we used to call up the ring to get the prizes. I mean, these were the dinosaur days. And from there, you know, when CNBC came, it was a big change for people like us because we used to get regular commentary, the ticker. Yeah. I mean, there's been a huge change in how we've been investing, say, 30 years back to when it was post-CNBC. So a big thanks to CNBC for all the effort that you guys have done to bring about corporate governance changes in the market by asking difficult questions to companies. And I think it's a great credit to the entire team of CNBC for what you've done for the markets in general. That's how I would say.
Well, Sridhar, how are you feeling about the markets, though? You know, we are definitely in celebration mode because it's our birthday. And the markets, well, we're on our way to 21,000 odd. What do you think? Are we getting a little bit ahead of ourselves?
No, I think, I mean, once the election results were behind us, I mean, it's reasonably clear that now we get one more term. If you ask me, my confidence level of 300 plus for BJP now goes up from, say, earlier 60% to now maybe 80-85%. So basically, the market likes continuity in governance because of the reforms that this government has conducted. I think that helps a lot in terms of how the markets will move from here to May and beyond. So I think the party will continue from here on. So I think the market will climb all walls of worries. Only big worry is the US inflation and the rates. Otherwise, domestically, we are broadly set for a big rally from here on.
Just one more query. You know, I always say that I'm keeping my SIPs going, but I'll personally as well, I have to tell you that I've been adding some gold as well, you know, in the last 10 days or so. And you have been, you know, a strong advocate that gold will do well over a longer duration as well.
So I've always maintained that the Indian woman is the best fund manager. Beat her returns and show me. And I'm a fund manager myself. I was just looking at the number, 20-year returns, Sensex and gold, both at 14.3, 14.4. I'm talking of 20-year returns for gold and for the Sensex. They're exactly the same. 1-year returns, also the same, roughly 14-15%. So I always say, Indian women, they're the best fund managers. Beat her returns and show me we do so much work for this 14% return. Watch CNBC, look at balance sheet, analyze, and the Indian lady just buys gold.
I love the watch CNBC.
Is there a bit of South Indian thing, South Indian love for gold here as well? No, that's not.
No, I think all women love gold. I mean, this is
no, I'm talking about you.
No, I don't buy the physical gold. I buy the digital gold.
And these returns are rupee, gold and rupee terms.
Return. So which is what I always say that it's actually also the currency which. So it's a hedge against the currency. So the currency depreciates about 4-5% a year, and this is the best hedge against the currency. Having said that, I think equity has also given the return, so it is not
Just one question. A lot of people want to know what from here, because the market has done so much. It's been a big step up in the last, 6 or 7 days. Can this continue all the way into the general elections? Will we see a rally like what we saw late 2013 into the general elections in 2014?
I think it's exactly like 13-14, because 13 had taper tantrum, and then you had the election results. And there were a lot of other global worries, but the market continued to, climb all the wall of worries. I think we'll see the same this time again, because FIs are so underinvested in India that we will see a shift from other emerging markets to India, and we'll see this market rally through up to May and beyond, is my view.
10, 15%, 20, what
Honestly,
numbers
I
to
don't know.
Broadly, what kind of a rally? A meaningful rally, right?
History suggests more than 10%.
I would say that we should continue with the returns that we've given in the last 20 years, which is like if we can compound 14-15% over the next 5 years, you're talking of doubling from here in like 4 years then, roughly, So I think that's a great number. You're talking of almost 42,000 Nifty.
Yeah.
So by the end of the decade, we'll be close to say 55,000
on the Nifty. Wow. Okay.
So,
there was one space that you were really bullish on, which is PSUs, right?
Yes.
It was. I remember having this discussion with you, I think a year and a half ago.
21 February.
Yes, and since then the PSU banks have rallied substantially, and PSUs in general.
Yeah.
Now they've come back once again. Under that umbrella, where do you still see value?
So I think, Sonia, every decade we see a regime. So if you go back to the previous decade, the regime was high growth, high P stocks. And that extended to such an extent that it was just high P, the E disappeared at some point of time. I think the regime has again changed. Something happened post 21, and the market has gravitated towards value to some extent. And fortunately, these value stocks also have started to return earnings now. So if you see the last 3 years, the best performing sector is PSUs, which is giving you a 50% CAGR. And the PSU banks also 50% CAGR. And the next one is like 20% below, if you look at any other sector. So obviously something has changed. And this is what I tell people, that when I look at some of the banks now, even after say 4 times, they've gone up 4 times, they're trading at 5p, 6p. You can still argue that, it can double from here, and still you can justify the value. I mean, I was just reading a report on the OMCs. I mean, if the numbers are right, they're trading at 5p, 6p.
Right.
So I'm not suggesting that you should buy or sell. I'm just saying that we are at an early stage of this because the starting point was so low that even after this spectacular rally, you can easily justify that if I give 10, 15, 20p for other sectors.
You can give maybe double-digit
You can
Ps.
give double digits. I'm not suggesting that you go and buy any of these.
No.
I mean, every individual takes his own call. We remain bullish on this segment. We think that the regime has changed. One last point. If you look at the top 10 Nifty for this year, there are 5 PSUs in there.
Yes.
And there are 3 auto stocks in there, which you know very well.
But my question was more towards, see, PSUs is a big basket. There are defense PSUs, there are power PSUs, there are banking PSUs. Where do you pick? Where do you pick from?
So, Sonia, that is the skill of the fund manager.
Let me just
right?
add to that.
Sure.
I think there is a PSC Nifty, the PSC-B's product, right?
Yeah.
So instead of choosing, for viewers who are watching, does it make sense to
fund.
buy a
In fact,
basket?
you go back to the 21 interview I gave, I had suggested that there are 2 PSU mutual funds.
Yes.
So for a retail investor, in my view, that is the best option. There is a SBI mutual fund and there is an Invesco PSU mutual fund. In fact, I was looking at it yesterday. The AUM is only 800 crores.
Wow.
I'm like, after 50% CAGR return, even now people are so skeptical. So that exactly tells me that nobody believes in the story. And I was actually so happy. There's a fund manager who comes on your show, I don't want to name, who's from Singapore, who comes regularly on your show. He recently added 3 PSUs in his portfolio. And for someone who's always said, I'll never buy PSUs, I was happy to see that there's a change. A slow one, but there's a change. I think there's a lot of denial. And I think a lot has changed in the PSUs. I think the governance has changed, the business model has changed. The stress from the government that you have to be profitable has changed, barring a few segments where they have their own issues. But I think this is a basket. I think the entire value basket is worth watching. So I think when regime changes, it is not like others will not perform. The other segments will also perform, but there will be a leader. If you ask me, possibly the leader is PSUs. I could be totally wrong, okay, but looking at the early, indications, when a regime changes, it changes for at least 10 years.
I think that's very useful advice, the mutual fund route. Buy a basket instead of trying to pick this or that.
Even what you suggested is also an option. But I'm just saying that it's better to buy a basket rather than, betting on individual stock, because that is a skill that we have. May not be possible for an individual investor to, pick and choose. Because as you said, some of them are trading at 2p, some of them are trading at 50p also in the PSU basket. So it is not a homogeneous set anymore because they have rallied 50% CAGR. I mean, that's a massive number.
So SBI and Invesco are the two mutual funds you spoke about.
The two mutual funds who have, and the AUMs are so low. I mean, I'm shocked. I don't even think they are marketing. I mean, it can't be that after 50% CAGR you have only...
I mean, actually, even when you buy funds nowadays, the challenge is funds are now 30,000 crores, 35,000 crores to find something where AUM is 800 crores. I mean, that's a rarity.
I invested in a children's mutual fund and I thought the AUM was only 1,000 crores. So this has the potential in the next 10 years is going to be big returns. I missed out on this PSU mutual fund, so I'll go ahead.
You didn't see the show I did in 21 before.
I'm going to do that.
Yeah. Smart money, yeah.
But we have gone on enough about the PSUs. Sridhar, I want to ask you about the backbone of the market, which is the banking names. And the larger banks, they have been big underperformers.
Yes.
Do you think the time has come, if you're looking at the banking space, yes, put some money in PSU banks, but some of these large private sector banks that have actually underperformed, is it time for them to come, take strike and maybe perform in line?
100%. So we are very bullish on the private banking space. See, they've had some challenges because of how the interest rates have moved. Deposit costs have continued to go up. Look at RBI's commentary, they have been tightening liquidity. So I think some of the headwinds for the banks are there. But I think some of these private banks have managed these risks many years now. I think they are very well positioned to, move from here. Their profitability will also move from here significantly because credit cost is not going up, even though there are some risks like RBI has been, flagging the risk, and rightly so, which is on the unsecured personal loans. We remain quite bullish. We think that the underperformance that they've had was for the right reason. But from here on, this looks like a segment. And the other thing is when FIs do come back, we are seeing early signs of that. This becomes an easy segment to enter. So I'm quite bullish on that segment.
I'm having a conversation with another fund manager. They said, Nigel, since you like cricket so much, it appears these private sector banks, they got their eye in, now they're seeing the ball, and now they're going to perform from here on because they've got their eye in, after a long time of underperformance.
I would agree with you. So there are different baskets, different ways of reaching your goal, right? If your goal is to get 15%, there are different ways you can buy PSUs, you can buy private sector. I'm not suggesting that the other components in the market will not do well. And when there's a bull market, all components do well. As they say, rising tides, it takes up all the boat. But there'll be some leader, and possibly that's how I'm positioning myself.
Okay, Sridhar, since we're celebrating 25 years, before we wrap up, if you had to give one piece of advice to your 25-year-old self, what would it be?
Which is to have invested early, do a SIP. We didn't have SIP at that time. If I tell my daughter, who was like 22, my son, who was 26, that invest every month from your salary, because the earlier you start, the corpus that you build by the time you are, say, 30, 40 is so huge. And the power of compounding, we just don't realize that it is so huge that if you are going to compound your money at 15% for 10 years, that's a massive number that it becomes the corpus that you build at the end of, say, 10 years. And that corpus then compounds at another 14% if you stay invested in the market. And I have no reason to believe that what we've done in the past 20 years, we should actually do even better, because I think maybe the next 10, 15 years will be the great years, because as we move from 2,500 per capita to, say, $5,000, typically markets give disproportionate returns. You look at what happened to China, or see Korea or Taiwan, and see what happened to their markets when their per capita moved from $2,500 to $5,000. They all gave outsized returns. So I would want to bet that we will follow the same path. We'll give outsized returns. And so this is the time to stay invested. and not worry about the timing of the market.
All right, time in the market, not timing in the market.
Yes.
Well put, Sridhar. Stay with us. You were talking about a fund manager from Singapore, right?
I am not
we
going to
actually have a fund manager from Singapore.
He joins us very frequently, by the way.
I'm not going to comment on
Samir
that.
Arora is with us. He's, of course, the main man at Helios. Samir, great to have you with us here on this momentous date. We're celebrating 25 years of CNBC. And sorry, we can't hear you. Go on.
Oh,
I was very happy to see Sridhar saying that if
Yeah,
the markets are up, everything is up, including PSUs.
No, are you the fund manager from Singapore? Samir, if you heard Sridhar earlier.
I am not the mutual fund manager, but broadly we also have many of those same stocks. But the point is that we have our fund, and me personally, we are the flexible fund managers. So at various points when it didn't justify, it did not was not in the portfolio, these PSU stocks, some of them still are. But anyway, I still don't agree with this painting the brush that something has changed. If Sridhar can explain to me the difference between, say, I don't even know whether it's listed or not, Bank of Maharashtra and Central Bank, and which one has anything other than price to book is 0.4 and 0.42, I would be very surprised that anybody knows that. So beyond a point, we cannot buy stocks based on some price to book arguments, because in many of them, we don't even know why they exist, what is the difference between one and the other, what app they have, what millennium crowd they have, what is it other than price to book, price to book. So it is up to a point is right that in some sectors, the PSU leaders are leading, but it is not that buy PSU baskets and buy everything. I will not agree with that. But
All right, let me just, Sridhar can't hear you, but Samir can hear Sridhar. So let's just continue this conversation for a bit longer.
Sure.
Samir was essentially saying, sorry, say that again, Samir.
first, I have to wish you a happy birthday.
Please do that. Please do that properly.
Happy birthday and best wishes. I've been there from day one, I think, or maybe even before you guys were formally called CNBC-TV18.
No.
So I've been there all along.
Thank you so much, and thank you so much for being sort of there every time we call you for your expertise, for your views, and I think you've been a strong guidepost for us in our markets coverage over the last 2.5 decades or so. Just to kind of complete that loop on PSU Bank, Samir is saying he's not impressed with the PSU rally.
So listen, I have great respect for Samir.
One minute. He go on. Samir, say that. I'll convey it.
I didn't say that. I am saying the basket, if you at one point say that since this is a rising market, everything is going up, that also includes PSU stocks. I was saying that between the 5th and the 6th PSU bank, what is the difference other than saying that their price to book is point something? What is the management? What is the strategy? What is the app? What is the technology? Nobody knows. For the top 1 or 2, which we have had forever, like State Bank, we've had since 2020, June or something. I know what it does. I know what its technologies. I know what its strengths are. I'm saying between the tail. In the tail, we don't know what it means, and we can't buy it off a price to book kind of number.
Okay, got it. Samir, first of all, thank you for your wishes, and thank you for being here through thick and thin with CNBC TV18. I mean, it's been a pleasure watching you, listening to you, learning from you. But, we were just having this discussion with Sridhar as well as to what would that advice be you would give your 25-year-old self. And he said, I would tell my 25-year-old self to start investing earlier. But now we've reached a phase where this new generation, right, we have the largest Gen Z population in the world. This new generation is very savvy about investing. So they know a lot more than the previous generation did. So what would your advice to them be?
I totally disagree with that. I think they know much less than we used to know because they don't read books. They only do options. They only do futures. And every day, because I am, active on Twitter, even in terms of reading Twitter, not just writing on Twitter, every day one fellow will say, I bought this stock because this thing happened. That guy bought because I saw insider buying. So on one factor they are buying. And those factors are working right now because there is a bull run going on for the last 2-3 years in all these stocks, which you can buy with one factor. I bought this stock because yesterday the management bought. I bought this stock yesterday because it disclosed something higher than you see on Twitter. Every day, the total logic of the buying is one line, at least the way they present it. And so I think that they are taking it too casually. Yesterday, I heard somebody writing that his client said that he'll be happy with only 50% returns per annum. And things like that. So according to me, they should read books much more than we did, although we also read and Sridhar and all. we were all, readers and are readers. There are many things I think they know less, but they shall learn over time. There is no free lunch in this business. Either you spend time or you spend effort. You can't just do two-line research and buy things.
All right. Hi, Samir. Good morning. Nigel on this side, and thanks so much for joining. And Samir, the last time we spoke, you were saying that in case there's an adverse outcome on the 2024 elections, well, the markets could see a fair bit of selling, or you could see some bit of downside. That it appears now that kind of uncertainty has been brushed aside, at least for now, going by the state elections. Are you feeling much better from here on? With regard to
no. I was feeling better then also because I answered the question that you asked. You did not ask me the probability of that event. You said if it happens. The thing in our business is that if we say that two things can happen, it does not mean that the probability is 50-50.
So you were anyways factoring in.
10% theoretical probability that if something goes wrong, you will lose. You can't say no, market would have discounted it in 1 minute. That's what I'm saying. But I was always confident. We are running with 78% net well before this outcome, because you know that the probability of the event is less, but in case it happens, it is bad for the market.
Okay.
So this is not changing that, but obviously you can say that it is easier now to tell particularly foreign investors sitting on the sideline that, hey, don't waste your time ticking the last box that whether there is political certainty or not. It is sort of already there. And if you want to wait, here, see this month you've lost another, say, 3%, 4%, whatever. So it helps in that, and therefore it sort of feeds on itself.
Samir, you speak with a lot of foreign fund managers. Are they going to come in full force in 2024? Because, where the markets have reached now, locals have done it without very much help from FIIs. Now, of course, we got to wait for the foreigners. What's your sense?
So I don't speak to foreign fund managers. I speak to foreign allocator. You can say that there is a fund or somebody or the other. 100% they will come, 100%. But the thing is, it is not surprising because they have always come, except in a few bad years, 4 bad years particularly. Last being 22, and then before that 18, and before that 11, and before that 8. But other periods, every year, FIIs have bought because they also have growth in their AUM because of worldwide growth, some allocation from this sovereign, this, that, whatever. Now the question is whether it will be in full force.
Yeah.
The reason for it being in full force might be because of their losing a lot of money and confidence in China. So if that reallocation happens, then the force becomes a real big force. Otherwise, anyway, they should be not net buyers, even in normal situations.
So
now the difference is there's a domestic buyer against it. So if both buy, then is where the fun starts, which is sort of we are all playing for.
The good part, Samir, is that large caps have not outperformed the market, right? Have not done anything actually this year. Most of them, Reliance, HDFC, Kotak, etc. Do you think that 2024 is a year when large caps will start to perform in a big way?
So we are betting that large cap financials will definitely perform in a big way because financials are otherwise doing well. And their stocks have not gone up and they are a large part of the market. So even if the foreign investor wants to be underweight, overweight, if he's starting off a 30% weight, he could be 25 or he could be 20 or 35, but he still has to put in substantial absolute amount of dollars into these stocks. For the other two groups, which according to me are IT, Reliance is one, but if I talk otherwise, it's IT, consumer and financial, which are the 3 large groups or large companies. IT sector, according to me, is still doing quite badly.
Okay.
And therefore, I don't think they will get the same amount of interest from foreign investors as financials. And consumer always looks a bit more expensive to anybody who comes in, who's coming in fresh now, would think that, was he waiting for this long to buy something at 40 and 50p and all that? So therefore, they could buy Reliance or they could buy the financials, is my guess.
All right, Samir, so, in the next, say, 12, 18 months, do you expect HDFC Bank to outperform from here? It's been underperforming. You have, on a valuation parameter, if the FI flows come back, and if you like financials, that's the one that normally everyone would go to. So do you believe that the next 12 months will be much better?
That is absolutely right. And according to me, it is putting a cap on other stocks also. So when HDFC Bank does well, then only the other stocks will. Because even today, you can't have many bank stocks trading at premium to HDFC Bank so easily because of the long history of the bank. And it doing well. That is our bet. It is our #1 holding in every fund that we have.
All right. Well, Sameer and Sridhar, thank you so much for joining us.
Thank you, guys.
Thank you for being a part of our
Thanks,
celebrations
Sameer.
today.
Thanks.
And all the best. This is promising to be a very good year. Not just 2023, but 2024 to come, right? With the elections, so many big triggers. So thank you both for joining in. Well, let's do one thing. Let's take a quick commercial break. On the other side of the break, it's CNBC-TV18's 25th birthday this week. Entire week, we have been speaking to a whole host of top management. So in a bit, when we come back, we will have the management of Mahindra & Mahindra, a stock that has generated huge wealth for its shareholders. Rajesh Jejurikar, the head of Mahindra & Mahindra, will be joining in to tell us how business is shaping up so far. Stay with us.
Congratulations to CNBC, and you guys are the gold standard when it comes to business reporting. So I'm glad to be here and wish you guys another very successful 25 years from here on.
CNBC TV18, embarking on a quarter century of excellence.
Okay, welcome back. You got the market, which is down 50 points right now. Just taking stock of where we are at about 20,888. And maybe just a run through of some of the big movers that we've had so far. Top of the list, and I'm going to start with gainers. The Adani Group stocks are still flying high. Adani Energy Solutions, which is the erstwhile Adani Transmission, that is up 5%. Adani Green is up 7%. Adani Total is up 10%. That part does very, very well once again. Tata Power is doing well. Power as a theme actually has done very well, 3.5% on Tata Power. Patanjali is up about 3%. There was an analyst day, I think yesterday. Sterling and Wilson Solar has been moving up 5%. Circuit is up another 3.5%. KEI Industries is up about 4% or so. There is GIC RE, which is up another 5.5%. Inox Green is up 3%, and so on and so forth. And just a run through of the big losers. My God, look at Paytm. That's a 15% cut coming through on Paytm. We were highlighting earlier this morning with Abhishek, some of the downgrades, etc., which have come through. And this is the risk on the day when that RBI increased risk weights. People like Jairam Sridharan of Pyramid had highlighted smaller ticket size loans basically will be the ones which will be hit the most. And, fintechs, etc., for everything that they do, the bulk of the money is made on lending. And with this coming under a bit of pressure, I think the market is reassessing prospects here. Lever is down 2%. Maybe just take a quick look at that. IDFC First Bank is down about 3%. IRCON, Balrampur Chini, I think, lost about 7% yesterday. It's up another 7%, is down another 7% right now. Stocks at about 403. AB Capital is down about 6% as well. So there are some pretty large moves, both on the upside and downside as well, as we begin this Wednesday's trading session. The Nifty with about a 50-odd point cut. It's a small cut, small pullback after the 1,000-point move that we've had over the last 6 days. Sonia.
Absolutely. So let's welcome our first corporate guest on board, Rajesh Jejurikar, who is the Executive Director and CEO of the Auto and Farm sector at Mahindra & Mahindra, joins in now. Rajesh, thank you as always for joining in, especially on a day like today where we celebrate 25 years of business news excellence at CNBC TV18, and you've been a large stakeholder of that journey. So thank you for being with us. And it's been, of course, so many years of excellence at M&M as well. As I spoke about earlier, so many years of wealth creation. How are you feeling about the couple of years to come, and what's the big vision at your end?
Sonia, Prashant, Nigel, firstly, congratulations to all of you CNBC-TV18 teams for what you've accomplished. And the 25th anniversary is, of course, something very special. So it's, real privilege to be with all of you here today on this very, very important milestone that you've accomplished. And I was just wondering what you're going to be doing differently on our 25th anniversary. I mean, one is, you get all of us to chat with you, but is there anything you're doing differently?
Well,
sorry, I'm flipping this back on you.
For one thing, we went and we rang the bell, in our newsroom. We had an entire newsroom here with us. So that's something we did differently. But, I'm glad you brought this point out
cool.
because in order to stay relevant, right, over decades, especially in this digital era, you need to do a lot of things differently. And I know that M&M is doing a lot of things differently as well, especially with all of your new launches. But you tell us, what's the best way to do this?
Well, like you said, it's we all have to be very excellence-driven in everything that you do, and that's really the way you positioned your 25 years, and that's the way we position our business, because we believe success is going to come out of doing things really well, raising the bar at every stage, and that's what we're trying to do with our new products, and products and experiences is really what drives value creation. So we are focused on our part of the role, which is bringing exciting products. We brought some really good products on the tractor side. Oja more recently under the Mahindra brand, very tech loaded. We've got Swaraj Target, which is a lightweight tractor, the whole new Swaraj range with the Dhoni, with Mahendra Singh Dhoni as the brand ambassador. And of course, some very exciting SUVs. Our pickups have been doing very well, and last mile mobility electric. So, it's been an exciting time. And really, like you said, celebration should be around excellence.
Okay. Since you're talking about numbers, right, let's get it to the brass tacks numbers. I mean, this month in November, the wholesale sales were up 20%. And that's not a small achievement. 20% month over month for the last many months is something that is perhaps hard to sustain, especially in this competitive environment. I just want to understand that, is it going to continue continuously be led by the growth in SUVs? Because you are putting some capex on board as well. Your SUV production will go up. What is the kind of numbers that you're looking to achieve over the next couple of months?
Can't give you specific numbers, but just to break up the numbers that you spoke about, the SUVs grew 32% in November. So, we did a volume of close to 40,000, and that was a 32% growth. Pickups, which is on a very large base, and in the less than 3.5 ton light commercial vehicle category, we have a very strong market share. We are, in the range of 48-49%, so very strong market share. We've gained 4-5 share points. There we grew 13%, so that's very credible on a strong, on a already high base. So overall, I think these are very good numbers. To your specific point on how will we sustain momentum, in this business, it is about, especially in the auto side, about new products. So we would have some new products on the ICE, and then the whole electric portfolio, which will come in early 2025. So we believe that will help open up a new category of customers, people who are looking for exciting design, technology, and a whole totally new driving experience, which comes out of the very quiet electric powertrains and very peppy, very powerful, very fast. So we believe that's what will drive future, and that connects to your point on driving excellence.
Rajesh, hi, good morning. Thanks for joining in. Prashant here. Let me just sort of take this towards
Prashant,
tractors.
Hi, morning.
Hi. Nice to see you, Rajesh, as always. On a year-to-date basis, tractor sales are a little subdued, right? But we are getting into the election season. Typically, what happens ahead of general elections? I mean, there is more money in the system, that is for sure. Should we expect a better outlook over the next, say, 2 quarters or so?
That's Prashant, actually a very interesting question. So 2 things happen around elections. One is, you're right that typically spending in rural does go up, but the election period itself is not a great buying period because, you know, very large chunk of people are engaged around, you know, election campaigning. So, you know, the election months and the lead in into that, normally in those states or whatever is normally, you know, a little bit of a slow time. But that catches up later, you know, it's like people are postponing to a time when they have a little more time to go and evaluate and buy products. But, you know, of course, this year the tractor industry is slow. We were anticipating that. We had started by saying low single digits. More recently, we are saying it will be flattish for the industry for the year. We have gained market share again about over 1 share point, and we have been showing some growth as a consequence of that. So in November we grew 4.7%. So what is leading to a slowdown? I think it's been a little bit around the monsoon timing. Some of the states in the south haven't really had very good rainfall, but it's also a very high base out of the past year. Last year the tractor industry was a 950,000, which is a very, very large industry size, and we were expecting that, you know, on a high base there will be some kind of a tapering off for a year or so.
Hi Rajesh, Nigel on this side. You know, Rajesh, first of all, congratulations to you and team as well with regard to the kind of launches you have done the last few years. I don't think I've ever got so many requests that can you speak to the management to get our delivery on time, because there's so much of demand for some of the vehicles that you all have launched. But the next phase of growth is going to be the EV space. Tell us about the rollout plans out there. I think you have 4 or 5 launches planned in the next 3 or 4 years. So tell us, when do we see the first EV and how do you expect that to ramp up?
Yeah, so you know, we've really put out, unlike what we do in the past, the whole portfolio of products. The first vehicle or 2 out of that will happen in early 2025. Production would start in 2024, but we would get it to market in early 2025. We're very excited about the way they're coming. They're testing very well. They've run more than 300,000 kilometers already on the tracks cumulatively. Several vehicles running on our tracks, and you know, they're performing very well, and we're benchmarking them with the best in the world. So they would be a very exciting portfolio of products. Of course, many of you've seen the design. They are really, really striking, strong, powerful designs, and but there's much more to it than just the design. So, you know, wait and watch that space.
Okay, that's on the EV space. You know, I just wanted one thought from your end on the operational performance. I know you won't want to give me any numbers, but if you look at the margins, right, you map the margins over the last 5 to 6 quarters, you've stayed in that range of around 12 to 13.5%. Now that you're getting into, over the next couple of years, getting into the electric vehicle space, SUVs are doing very well, tractors are coming back. Is there scope for your margin profile to rise above this 12-13% mark?
Yeah, Sonia, so, you know, when we talk about margins, we often kind of guide that when you look at a total margin, it's not really representative because we have 2 different businesses with different margin profiles. There's an auto business which has gained a lot of margin. It's now, as you saw in the last quarter numbers, we've got to 7.9% for our auto business. The tractor margins are, we say typically, you know, we believe is a good margin in the range of, for our core tractor business, between 17 to 19%. We are in that region. But as the auto portfolio is becoming stronger and growing very fast, the weightage of margin is bound to be affected because auto is, which is growing much faster at the moment, is on a 7.9 odd% margin profile. And when you compare that with farm, which is on a 17% margin profile, obviously the weighted margin is going to come down as auto grows faster than farm. Does that help answer the question? So I think we are basically growing auto margins very well. Farm margins, you know, are flattish given the nature of the industry, but we often say that irrespective of what's happening in the industry, the tractor margins operate within the range of 17 to 19%, which has really been our strength.
All right, Rajesh, we'll leave it there. Thank you so much for joining us here on this special day and speaking with us here. Thank you very much. And thanks for all the support over the years, and look forward to more.
Pleasure. And have a great week of celebration, all of you.
Thank you. Will do. Appreciate it. Well, let's move on from one top management to another top management. Dinesh Khara is chairman of the country's largest bank, State Bank of India. Let's get chatting with Mr. Khara about, of course, the implications of the increase in risk weights that the RBI implemented, some of what we are only starting to understand now, like in the case of this sharp fall that we're seeing in Paytm. But first of all, Mr. Khara, great to have you with us here on CNBC. Prashant this side. We're celebrating 25 years here at CNBC, so thank you very much for your support all these years, sir.
Thank you very much, and all the very best to CNBC also.
Thank you so much, sir. Sir, I just want to begin there, what I said earlier, which is some of this, the risk weight increase trickling through. We spoke with you earlier, we've spoken with others as well, and the general understanding is that the smaller ticket size loans, under 50,000 rupee loans on the unsecured side, that is essentially going to see a big slowdown. Is that your understanding as well? And I mean, if you can kind of explain that to us.
Sure, I think there is a lot of anxiety on this particular RBI guidance in terms of RWA. But the way I look at it is that this is actually applicable only to consumer loans in general, but for housing loan, education loan, vehicle loans, and loans secured by gold and jewelry. When you mentioned about low ticket loan, many of them are the loan against gold and gold jewelry also. So the general belief that that there'll be a slowdown in the loans and the low ticket value, it may or may not really happen. So if at all we exclude these, we filter out these exclusions from the consumer credit, we observe that the consumer credit has been growing at about 25% plus since May 22. And the share of these loans, which are actually impacted by RBI norms, is just about 15 trillion on a total loan base of about 151 trillion of the banking system. So in all about, it is about 9.8 to 10% as on September 23. So if we look at the impacted portion of the personal loan category, I don't really expect that it will have a significant impact.
Okay.
The other piece which I may share with you, that the banking system overall are holding about excess capital to the tune of about 7 trillion. And when we evaluated the impact of these higher RWAs, it will consume only about 84,000 crore worth of capital from the banking system. So in all, about 0.70% is the overall consumption of the capital for this particular piece. So I think for all purposes, I perceive it to be a non-event.
Okay, got it. I mean, from a banking, but absolutely. I mean, there's excess capital in the system, and the implication will be small. But as the country's largest banker, sir, you've got a bird's eye view of which segments are accelerating, where perhaps there is trouble fermenting, etc. Specifically for fintechs, what is your view, Mr. Khara? Who were, the business model for many was, of course, built around building out the lending business. Are the concerns and what the RBI has done a bit of a body blow there, or you don't believe so for that segment, for fintechs?
I think agnostic to fintech or otherwise, the way I look at it is that if at all the lending entity have got a system in place for understanding the credit profile of the borrower, and they are mindful of the risk which they are undertaking, I think that is something which is very critical. Whether it is small value, low value, high value, whatever it is. But very important is underwriting standards and also the collection mechanisms. What is actually was probably a worrying area was this excessive BNPL which was seen, where simply on looking at a particular transaction, the offers were being made for offering the credit. That is something which is a matter of concern. And I think that particular segment of the business might get affected. But other than that, I perceive that it should not have any significant impact overall.
Hi, Mr. Khara. Good morning, and thanks so much for joining in. Nigel on this side. Well, I wanted to ask you about the other piece of news then. How much of your lending, how much of your loan book is towards NBFCs? If you could give it to us in percentage terms.
NBFC exposure should be, we have got a loan book about 36 trillion, 35, 36 trillion. So on that, it would be somewhere around 8-9%. And it would actually involve some of the public sector sponsored NBFCs like, the AAA rated NBFCs also. Significant portion of that is of this NBFC book is essentially those NBFCs or the NBFCs which are supported by leading groups, and they are very well managed also.
Okay. Mr.
Small
Khara,
NBFCs composition would be very, very small.
Okay, got it. Mr. Khara, good morning and thank you for being with us on the channel. I just wanted to talk a little bit about growth as well. What kind of loan growth do you see, not just for yourself but for the industry overall? Which are the pockets that are picking up now, both in terms of corporate as well as retail loans, and overall, what's your vision for both FY24 and 25?
Well, as far as the loan growth is concerned, we are seeing a lot of interest coming in from the rural and semi-urban space also. So actually, corporate, we do get to see the positive trends as far as the renewable is concerned, and as far as EVs are concerned, and even the conventional steel, cement. So all these areas we are seeing good traction. So I think corporate book also, we expect that this quarter we should get to see much better growth even in the corporate sector also. And the SME space is witnessing a decent growth. And apart from that, I would say that as far as the retail is concerned, that will continue to see the very strong growth, including the home loans and the real estate. Actually, home loans, essentially home loans are seeing decent growth. I would just give you some kind of a comparative. As far as the housing is concerned, for the system as a whole, as compared to about 9%, it has grown very well. From April to October, it is somewhere around 25-26% growth is seen. So I would say that this is a very promising sector, and this also leads to growth in all the core sectors of the economy. Though infrastructure is more or less at the same level where it was in the previous year for the system as a whole. But this is the other area which is going to see growth. And I think I would say that rural, SME and corporate also will get to see a reasonably decent growth.
Okay. So when you talk about decent growth, what are the numbers that you're looking at? And also, what does this mean in terms of the asset quality for the bank?
Well, as far as we expect that the system should be growing in the range of about 16 to 18%.
Okay. That's for FY24, is it?
That's right. That's right.
Okay. And what are we looking at for industry growth in FY25? Would it be in the 16 to 18% range or better?
I would say that this is a function of how the real economy works, and the early trends which are seen as of now for the year 24-25 are also quite encouraging. So I think with that in mind, my expectation would be that though it is too early to predict what is the likely growth in the year 24-25, but my normal expectation would be that it should be in the similar range.
All right, Mr. Khara, we'll leave it at that. Thank you so much for joining us. Appreciate your time here on CNBC-TV18. Let's slip into a quick break on that note. On the other side of the break, Mitesh will be joining us for a technical check on the markets. Very quiet, really, the start of the market today, just consolidating around that 20,500 mark. But more on the markets in a bit. Stay tuned.
I would like to congratulate the entire CNBC TV18 team for completing 25 years in the Indian news industry. It has been the channel of the business channel of the choice.
CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Well, the market's a little bit under pressure. The good news, though, is you still have more number of stocks that are advancing in comparison to the number of stocks that are declining. So the crisscross line should come up for you on the screen. Mitesh Thakkar is back with us. Well, Mitesh, what do you make of this morning's trading session? After a while, in the first half, we're down closer around 70 points. Would you be looking to buy into this dip? And particularly on the Nifty Bank, from around that 47,000 mark, we've come down to around 46,500. Where does support come in at?
Morning again, Nigel. I think while the Nifty, has come off a bit, but I think it is the Bank Nifty which has come into the buying zone for me. 46,500 was my support area, and I think the low which we've got today is around those levels, 46,507. So we have bought some quantity, not a very aggressive one. I think once we see a reversal on the hourly charts, we'll add more to long positions. But yeah, I think around 46,500 buy with a 300 point kind of a stop at 46,200. I do believe that there's a good chance of us not only retesting the recent highs of 47,250, but also, getting past that. So in that sense, maintaining a long bias and using this decline to buy into it, keep a stop below 16,200. 46,200. And on the stock side, I have a buy on MRF with a stop at 1,15,000 for targets of around 1,22,000. And the other one which I like is Glenmark Pharma. That's a buy with a stop at 808 for targets of 840.
Okay, thanks a lot for that. Well, power is one space that is coming back in a big way, so don't lose sight of that. Tata Power is now up almost 5%. NHPC is up almost about 3% odd. This whole power and renewable energy space has come back in a big way over the last many days. So the market has taken note of that. But let's shift focus to the commodity space. One big positive trigger for this market is the fall that we've seen in Brent crude prices. And Manisha Gupta has been, appraising us of that. Manisha, morning. What are you tracking today?
Sonia, thank you for that. Well, this week, every day, we have seen a decline come in for the crude oil prices. So we are trading below 75 for the Brent prices. We're also trading below 70 for the WTI prices there. And it's a 5-month lows that you are looking at in sense of crude oil prices. So with nearly 4% of a decline coming in for the crude prices, this hasn't been such a great week. And not just crude. This is what the other commodities also have done. So while the crude is trading at a 5-month lows, you have natural gas at a 13-week lows, heating oil 4-month lows, and the gasoline prices are the most hit, trading at a 1-year lows in the international markets. This is what we've done in sense of the previous week in case of prices there. So while the week has seen 8% of decline come in for the crude oil prices, natural gas is down by 8.5%. It's a 6% decline coming in for heating oil and gasoline. The only thing, as I've been telling you, the positive trade has been in case of coal, where we've seen 9% of gains. Nearly $140 a ton is how coal prices are trading right now. But for the crude oil prices, there are various concerns right now. To begin with, while we've seen the U.S. inventories for crude gain up, the gasoline inventories have jumped up by 5.4 million barrels. So that tells you that the demand seems to be slowing down in U.S. as well. And not just U.S., you are looking at concerns that the OPEC and allies, while they have talked about a 2.2 million barrels per day of a cut, but remember that is voluntary, and markets do believe that you may not see that happen on ground. On paper itself is much on the lower side there. And then apart from that, it also is about the Chinese demand, which has been on the weaker side. From Moody's giving an outlook in sense of negative, the kind of imports that we saw in China in major part of this year tells you that China is sitting on huge inventories, and if the demand does not pick up, then China may not want to import so much going forward. So that's one another market which may not be looking at so much demand coming in. The dollar index trading at a 2-week highs has been putting pressure as well. And then you have the PMI data that came in from Japan, US, Eurozone. All of that came in on the weaker side for the month of November, and that has been weighing onto the markets. It also has been about Saudi Arabia for the first time in 7 months cutting the prices, official prices that is, for the month of January, saying that the demand seems to be easing and the premium is coming off. And that tells you that those 95, 96 kind of levels that we saw in the month of September perhaps are not coming in a jiffy. The street is expecting that there could be a surplus in this quarter and the next as well, and the demand hasn't picked up yet. It's all going to be about the US non-farm payroll data tomorrow. All eyes on that for further direction.
All right, Manisha, thanks a lot for that. Let's step into a quick break. On the other side, we'll get you an exclusive conversation with R. Shankar Raman, the whole-time Director and Chief Financial Officer at Larsen & Toubro. Stay with us.
congratulations on your anniversary. I've been talking to the channel for 20 years, so it's my pleasure to be.
CNBC TV18, embarking on a quarter century of excellence.
Welcome back. To reiterate, we are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us. So joining me now is the Group CFO and Board Member at Larsen & Toubro, Mr. R. Shankararaman. Mr. Shankararaman, thank you very much indeed for joining us on our big day. We would like to think that we are lucky because the global and the Indian news is also brimming with positivity. Let me start with the GDP number, which surprised hugely on the positive. It's not just the 7.6% GDP number. It was largely because manufacturing was 13.9% and construction, something that you would be interested in, has grown at 13.3%. So let me start there. You gave us a very good guidance in terms of your revenue growth. Do you think it is going to be even better than that, given this macro performance?
Thank you, Lata, for having me. And let me start by wishing CNBC TV18 and all of you my heartiest congratulations. Entering into the 25th year is a big milestone, and I think sustainability, staying relevant, etc., has contributed. So credit to all of you who are part of that brand to have made the brand so enduring and dear to the viewers. So congratulations.
Thank you.
Now coming back to the question that you asked, I think it is no surprise that the construction contribution is picking up, because if you look at the orders that have got placed out over the last 2 years, ever since the government adopted the policy to be investment-led in terms of creating employment, making sure consumption demand revives on the back of that employment generation. It was but natural that with the lag of 1-2 years, construction will begin to pick up. Most of the projects that were awarded post-COVID are all in advanced stages of construction. And consequently, it is not surprising that their growth contribution is significant. We fortunately are in the thick of many of these important projects. And one of the reasons why during the discussions that we had post our half-yearly results was that we stuck our neck out and said that we are very likely to outperform our revenue projections that were put out as guidance at the beginning of the year. We had guided somewhere between 12 and 15%.
Yes.
And looking at the pace at which things were moving, we were reasonably confident that we could possibly exceed that guidance. By what order of magnitude could depend on so many other factors, because today, as we construct more and more, still clearances and approvals are part and parcel of that construction journey. Not everything is available to companies upfront for us to predict as to what kind of resources it has to deploy and how the revenues will map out. Now, for example, the poll in 4 states or 5 states actually put a temporary halt on some of the work that we were doing in those states. Now, we are also heading towards the national elections. So consequently, some interruptions are to be anticipated, which is what is making the whole job of predicting the exact percentage of growth over and above our guidance becomes tricky.
Okay.
We do believe that the year could go past because our assessment is the elections could be mostly in maybe April.
Yeah.
Around the time when schools shut and that infrastructure is available as polling booths, etc., could be the ideal time, but one never knows. So consequently, depends on whether we have the entire 12 month or we have a portion of that chopped off would determine the growth. But the momentum is robust.
Okay.
And I'm glad to tell you that the authorities, be it local authorities or central authorities, and the multilateral funding agencies are taking enormous interest to ensure that the cost of infrastructure that we are building stays competitive by arresting the time overrun. I think it's good that the system has recognized the cost overrun as a consequence of time overrun. So if you want to get the cost under control, we'll have to get the time under control. And that is also helping the industry's costs.
Yes, we saw your working capital to sales also move into a very healthy direction. Should you see more of that, since you say that everyone is now conscious of time overruns, more improvements in working capital to sales?
There is a natural cycle to the invoicing and collections. And given the fact that many of the projects are state or central government sponsored projects, there is a lead lag in collecting this money. My sense is that if we are able to operate working capital at about a 16 to 18% band of the revenues, I think we are doing a commendable job. There is always a possibility to keep improving, because never say never for any such improvements. But it does look more practical to assume and operate at a 16-17% band rather than look at a 7-8% band.
Okay, fair enough. Let me come to the order book. I mean, you were always expected to better than that 10 to 12%. I mean, by a huge margin. But now you've lately announced a lot of big orders from the Middle, even more big orders from the Middle East. So you don't want to increase that order book guidance? Or even if you can tell me this, do you feel that you will, outperform by an even larger margin than you thought perhaps a couple of months back?
I know when we last spoke in October,
yes,
we did mention that we will outperform the guidance. If you really see, the first 2 months have been relatively quiet of the current quarter as compared to the past 2 months leading up to the end of the previous quarter. There is a certain volatility and fluctuations to this ordering momentum because of the processes involved. It is good that the order inflow is helped by some large orders from Middle East. But if you look at the pipeline of orders that are lined up, I think there is still some more distance to go before we can announce, complete outperformance to the order of magnitude that you possibly are hinting. We will have an opportunity every 90 days to revisit this. So end of this month, as we gather ourselves to see how the last quarter of the year looks, we will have an opportunity to see whether we can be a little more precise than what we are. But I do expect a certain slowdown in the last quarter. Run up to elections have always been indicative of that.
Because any orders that you give out now, invariably the execution will be carried under the supervision of the next government.
Yes.
Now, how far will the government's, the current incumbent government will sort of commit themselves to these programs is to be seen, because we've had history of some of the state governments cancelling projects that have been announced by the earlier governments for no rhyme or reason. And I think it has put a lot of construction industry into a big spin because of the resources that it had committed, etc. So even in the industry, we will possibly be a little cagey and slow of the orders that we win in Q4 before we really go full clip. So I think there is a certain natural headwind that will develop. So I think we'll have to factor for that as well.
I wanted, if you can update us on, the vertical of electrolyzers and green hydrogen. That was the other thing Mr. Subramanian was very excited about. So any update on that and its future in the next 2 years?
Yeah, I think we realize the fact that energy transition is going to be a big play globally, and India cannot be left behind. And consequently, when we looked at the various opportunities for this transition, two things stood out. One is India needs to get more solar generation while waiting for solution for battery storage, etc. The solar generation needs to be augmented. So we started betting on solar projects. Fortunately for us, international orders also came our way. And since today we are fairly large with almost $6 billion worth of order backlog just in solar EPC projects. Secondly, we also looked at hydrogen as an emerging fuel source for industrial application at least, because we yet do not know the cost competitiveness and the safety factors around its use for individual consumption. But at industrial application, automotive transportation purposes, it did look promising. So we said that we will get into that play by manufacturing electrolyzer, which is a key component for hydrogen generation. Fortunately for us, I think we scouted around and got a technology tie-up with McPhy Energy of France. Today, as we speak, the first electrolyzer is under construction. We are putting that together in our Asira plant. By end of this fiscal, we'll possibly have a prototype, and we could check that for its application, its features, its cost competitiveness, global attractiveness, etc. And if the product marks all this well, we'll possibly experiment it with a couple of hydrogen EPC projects, by which time we hope to get. And then if that does well, we will possibly take it as a global product. So there is an opportunity to scale this electrolyzer manufacturing activity. And we think, being the manufacturing experts that we are in some of these areas, we think we stand a good chance. The other area that actually excited us is putting together as a EPC package for hydrogen manufacturing. Fortunately for us, we struck a transaction with IOCL at an MOU basis. IOCL as well as Renew Power will provide the green power for the electrolyzer manufacturing. We would put up a plant which will generate hydrogen, which will be used for the refinery of IOCL. Depending on how this goes, this can be replicated in the other refineries of IOCL, as well as replicated in other refineries beyond IOCL. So this being, and this is more public sector led at the moment, but I'm sure the private sector, who consume a lot of industrial fuel, would also look at this, provided the solution is cost effective and functionalities meet their requirements. So we are pretty excited about application of this hydrogen through our EPC and electrolyzer manufacturing. Added to this excitement is our recent foray into semiconductors, because that's another area that we have been trying to explore as to what is it that we could do. We realized that our ability to compete with global giants on manufacturing fabs is going to be very limited. So consequently, we shifted our attention to design. And now we have put together a company, and we're in the process of assembling a team which will work on design, 40 nanometers and beyond in terms of the chips. And we possibly co-create a design along with manufacturers, OEM. And hopefully, if the functionality tests are passed, we would design those chips using the talent pool that India is blessed with on chip designing.
Okay, now that's all the cutting edge areas that one would want the company to be in. Very good to hear. It's not surprising, therefore, that the L&T stock is at all-time highs. You're celebrating along with us. Thank you very much, Mr. Shankar Raman, for this conversation.
Thank you. Hopes precede actual performance. We hope we back it up with performance. Thank you.
Thank you, sir.
All
Thank you
the
very
very
much. Thank you very much for that. Have to take a quick break, and thereafter it'll be time for Chartbusters.
I wish all the best for the CNBC-18 birthday on 7th December. It will be a very, I wish that it will be a very successful, grand success.